Good evening to all of you. Welcome you to today's webinar. Today we are going to look at the trend, how the Nifty and Bank Nifty performed in August, and what is it that we can expect in the current settlement which started from yesterday's close. And also we will look at the general quarterly performance results that have come for the June quarter, which has got released in the July-August period, and just see which are the stocks which performed excellently well, and also in the charts how these stocks are doing, so that you can look at these stocks for buying on any dips. Now we'll look at the Nifty movement in this month. August, we saw this is the monthly movement, and this is the one where right now it is still there because the month has not ended, but expiry has happened. The next couple of months, couple of days, this one will be over. So here it is the overall high to low is generally is compressed. It maintained a bullish trend, but the overall high to low is now compensating for the spectacular run which it had in the previous month in July. So we have seen only some 800 points movement high to low. Last month, if you see, this was a movement which is from 15,500 to 17,170, which is around 1,700 points, right? 1,600 to 1,700 points. Normally, it's around 1,200, 1,300 points. But last month it went up nearly by 1,700 points, 1,600, 700 points, the high to low. Now that has been compensated to some extent with the movement between the high to low movement 17,154 to 17,992. Though the high to low range is smaller, the overall trend seems to have not turned in favor of a bullish move. Now if you see, the global market also has shown strong recovery based on the results that have come in the last quarter. Till June, there was a big fear that the global markets could enter into, global economies could enter into a big recession. But even now the jitteriness is there, particularly Europe is likely to get into more of a problem. US already is into some sort of a contraction mode only, but still they expect this to be only a very shallow economic negative growth, and they expect it to pick up. So that's the reason why we see that the yields have stabilized, that is long-term yields have stabilized, though Fed is still likely to increase the rates by another 100 basis points before the end of this year from 2.5 to 3.5. Now that seems to be factored by the markets. Right now, if there is any news regarding that probably they are going to pause on the interest rate hike after December, then there will be a full-blown recovery as far as the market is concerned. Now it has come up by 18 to 20% from the bottom. If you see S&P, it was 36.35 the low, and it rallied closer to 4,300, which is almost 700 points, coming around 18 to 19% climb in the last 2 months. Similarly, our markets also come from 15,200 to 17,900 levels, so around 2,700 points in the last 2 months or so. And now the overall technical picture has also turned in favor of the bullishness, because if you put the trend line, the important highs, if you connect, now if you connect this, it is just went above the trend line, though of course 17,850 or so is the trend line resistance area, and it has come very closer to that, right, or even exceeded that a little bit. So from the overall structure of this market, as we see it, it looks to be a corrective, because if it has to have a bigger fall, it would have declined quite steeply. It could have declined quite steeply, but that has not happened. So the entire what we say 18,600 to 15,200 is around 3,400 points, closer to the 20% mark, 17 to 18% fall. That has taken nearly 9 to 10 months. If you see 1, 2, 3, 4, 5, 6, 7, 8 months for this. So the correction, we can say this is not a bear market. this is a correction in a bull market. That's how we have to go about it, because the fall also has got restricted above the 20% mark, one. And second is that the time that it took for that 20% also makes it look, the entire pattern on a visual basis looks to be a very corrective pattern. So now we should be looking at some dip, possibly because of the overheated condition in Nifty. We could expect some sort of a correction. Now we look at the weekly chart and daily chart. If you look at the daily chart, this is the, in the Fibonacci terms, this is the 23.5% retracement of this entire move from this place to this place, from the low of 15,200 to the 17,995. We put the Fibonacci retracement. The first retracement level comes at 17,330, and it has taken support at 17,330. So it has to break for the 17,330 to go towards the 16,920 levels. 16,920 levels. Now, if at all, for some reason the market declines, then we expect this 16,920 to hold, because that is a 38.2% retracement, a very critical level in order to ensure that the bullishness does not get evaporated. So 16,920 should be a very important support level if there is a fall. So next month, that is the coming September, if at all there is a fall, we should expect 16,920 to hold. Now previously we have been talking about some important ratios. That is, normally if there is a decline, it comes by 5.5%, or it comes by, in a bullish market, there are two corrections that normally happens. Either it is a 5.5% correction or a 9% correction. That's what happens. Now the first 5.5% now comes from 17,990. If you look at it, 17,990 into 0.945, that is 17,000 or 16,920. So this is the important level, 16,985, because normally we have seen Nifty correction, Nifty in any moment around 1,100 points, right? So 17,995 to 16,917. I think we should expect it to stabilize around that level, because if you see in any bull market run, which in the last couple of years, the percentage fall of correction in a bull market is around 5.5%. Normal, if it's a big bull market, and in any steep decline, it just stops at 9-10%. Only in some cases it goes above that 10% mark. Okay, maybe 11%. When we talk about 9%, sometimes it goes to 11-12%. It happens in some cases, but generally speaking, 5.5% to 9% will be a very important level of support if there is a fall. So we expect this to hold around the 16,920 in case if there is a bigger fall. Now this 16,335, where it 3 days back, which when it fell down to that level, this also incidentally happens to be the 20-day moving average. It also happens to be a 20-day moving average. So any fall should now first get supported at that level normally, and now that has happened. So if there is going to be a fall, then we should expect move right up to 50 and then under a 200-day moving average. So let's look at that. Moving average. So we look at the 50-day moving average. So 15-day moving average is now coming only at 16,600 levels. 16,600 levels. So that seems to be quite far off. Now the next moving average, then we look at the 200-day moving average. So 200-day moving average right now is around this level, 16,950, 960, and we hope that that will be maintained. That is, it may not fall much below the 16,920, 930 or around that level. So this should be a very important support level for Nifty in case if there is a bigger fall. Now on the monthly chart, we have also seen that it has broken 3 months high. So which means any correction is what we can say is a buy on dips market. So let's hope that probably the for those who are having bullish view should keep the first this low as a stop loss 17,330. If you are already long, then Nifty you should protect it with 17,330 as a stop loss. Now the re-entry point, if you look at it, let's look at the weekly chart, or first we'll look at the daily chart here itself. Now it has taken support here, right? Now then it went up, then we saw some sort of a resistance around 17,725, and then it started to slightly dip around that level. Now if it again starts to move above 17,725, it will also be breaking this particular week's high. This week's high also it will be broken. In that case we can go long, keeping 17,335 as a stop loss. So we look at the weekly chart now in Nifty. So this high, which is 17,726. So come next week we have a break above 17,726, then buy above 17,726, keeping 17,345 as a stop loss. So you can continue your bull market rally with a 17,000 above 17,726 with a stop loss of at 17,345. So this is the trading view that we can have for September, because if it starts to move above that, then for the next couple of weeks it can be much higher. Now to what extent it can go up, now we will see with the help of trend line. Now we will join these two tops and see to what extent it can rally in coming weeks. Okay, so this line maybe can just hold the Nifty now. So it comes 18,114, around 18,114. I think 18,114 to 18,200. So what we expect is that in case 17,725 is broken, then September will see 18,120 to 18,200 achieved, and it can even break that. So as long as 17,345 holds, then for the next couple of weeks we can expect 17,345 was the this particular week, right? So next 3 weeks at least we can expect it to go clearly up to 18,200 or even more. Okay, so we will be getting more and more confirmation about this bull market if this week's high is broken. Already it is, the correction is over. That's how we have to take, because it is above all the important moving averages, right? So we have to call this as an important bull market, because the PE levels which we have been discussing in the last couple of weeks also has taken support closer to the 20. That is the lowest that we have seen in the last 5 years, and below the median of the last 10 years and 5 years. So we clearly expect the expansion in PE to take place, which will lead to a rally of at least 10-15% still. Okay, so 18,120, 18,200 and these levels are extremely in the realm of possibility in coming month, and I won't be surprised if it is going to exceed that also. So the stop loss that we are looking at is 17,345 in the near term. So maintain, for those who are going to enter fresh, consider a break above 17,725 with a stop loss of 17,345. Okay, so we look at Bank Nifty and then we move to some important stocks. So Bank Nifty is clearly let's say the daily chart we'll put. So the long-term trend is up because now it is above the 200-day moving average, and we look at the 50-day moving average also for this, and 20-day moving average. 20-day, let's look at first. So it also took support closer to the 20-day moving average and started to move up. So keep this low as a stop loss. Time being, you keep this low of 37,950 as a stop loss. Okay. Now we look at the 50-day moving average in Bank Nifty. That's quite far off. So we should consider this as an important stop loss. Now, what if Bank Nifty is going to fall because you've got a lower top confirmed if it is going to break Thursday's low, that is 38,803. So the first stop loss that you can consider for any bull move, which you are already, suppose if you are already long, I think you should keep a stop loss of 38,803 first of all, because you cannot allow the profit to evaporate right up to 30, this is 37,905, sorry, 37,950. So this is 38,803, which is more than 800 points. So we cannot allow the profit in any long position to evaporate to that extent. So the first stop loss that you should consider is the 38,803, because that will confirm a lower top. So once a lower top itself is formed, then you can put in a trailing stop loss. So you don't need to go short because the overall move is still on the upside, but you can consider a trailing stop loss there, right? So that is one. Second thing is, for those who want to enter afresh, looking that, then in that case you can still enter keeping 38,803 itself as a stop loss, right? So you can enter now, put 38,803 as a stop loss, or you can go break about 39,471. So 39,471 with a stop loss of 38,803 itself, because that is the breakout bar. So 39,471. So the Bank Nifty for next month, any break about 39,471 is a weak high break. So that's good. And also the breakout bar on the daily range, okay, which is breaking, is 38,803. So you got some 671 points for the Bank Nifty for position traders. You can consider this and go up. So you can look towards buying at right now, or a break above 39,471 and keep 38,803 as a stop loss. Normally Bank Nifty rally will be on a high to low, probably could be around even 3,000 points or so, because normally the option at the money option normally is valued in such a way that if you also multiply that into 3 times, that should give the high to low difference, right? So let's look at what is the Bank Nifty option for next month, at the money option. So Bank Nifty option chain. Look for 29 September, which is the expiry for next month. And if you look at 39,000 option, approximately on an average is around 850 levels or so. So that means 2,500 points rally is possible on a month, or rally possible in the sense that high to low at least can be 2,500 points. So going back to the chart now, we'll put a weekly chart. So this is this week, right? So next 3 weeks can see 37,950 plus another 2,500 points to add for the next 3 weeks. If this is going to break 40,450 or so, so I think we can comfortably exceed this height and probably move towards 40,450 to 40,500. Now we will also draw the trend line to know probably the resistance area, right? So this place, okay. So now coming weeks should see this trend line holding, that is 40,000 to 300 to 400, right? So 40,300 to 500 range is possible in coming weeks in September. So 40,300 to 500 is very much on the cards. Yeah. And also we can go with the Fibonacci also. Now this is let's say we'll trend based Fibonacci extension. Right. So the 38.2% of that comes to 40,730. So eventually, over a period of next few weeks or so, possibility that it can go right up to 40,732, 40,732, based on the Fibonacci trend extension. So the first resistance that can come from this level could be 40,732, based on the Fibonacci. Now the trend line is resisting at 40,300 to 400. Eventually, probably 1 or 2 weeks later, we could see the 40,732 levels also being reached, which probably could take 1 to, I think 2-3 weeks it can take, because at this level even the trend line in 2 weeks time, possibility of a 40,700 is possible in 2 weeks time. So this is right now we are at 40,000, 38,009, 39,000 approximately. So 40,700, 750 is possible. That's approximately 1,800 points from here. It's possible in the next 2 weeks or so. So it's looking quite bullish. Bank Nifty is also looking quite bullish, and breakout, please buy with a stop loss of 38,800. So not much of a big stop loss. Only 600 points, around 600, 650 points stop loss for a much 1:2 or 1:3 profitable trade that you can generate as far as Bank Nifty is concerned. So overall, the trend is looking good, and if you see the last month movement also, Bank Nifty has been an outperformer. Put the monthly chart. We have always been maintaining that Bank Nifty is doing much better than Nifty, and already is also above a 3-month high. It has also broken the trend line, and this pattern also is quite a corrective pattern. So we should be seeing first above, probably it could take closer to the 42,000 levels, 42,000 or even slightly on the higher side. And also if you look at it, this break also we have been telling last couple of weeks before also, that this confirms a higher bottom. This, because once this high was broken, it confirmed a higher bottom. So we could have gone long about 35,958 itself. So we are quite bullish in Bank Nifty from 35,958 itself on the monthly chart. So that is now continuing, and we will keep an high closer to the 40,400 to 40,500. So Nifty and Bank Nifty very clear that we are in the up move, and higher levels are likely to come in coming weeks. So we have also given the levels above which you should go for a buy as far as Nifty and Bank Nifty is concerned, and we have also given the stop loss levels and also the likely profit target, the potential targets that it can happen as far as Nifty and Bank Nifty is concerned, all from the levels we are speaking from technical levels. Whether the market is going to get overheated or not, it will be, because now the trailing EPS is going to be so the TTM EPS now is 788 for Nifty. So suppose if it reaches 18,200, let us say, then the P is going to become 23, and it will be going above the 10-year median, and 5-year median is 25. So probably another 10% rally, 2,000 points, if it comes to, for some reason, it has to come. It can come only if the US markets are also going to look bullish. Now, if this is to happen, this sort of PE that has to come, then we should see a substantial drop in US Treasury yields. So the Treasury yields in US is now at 3.04 or so, and it should drop down back closer approximately to what I would say is it should come probably even below 2.4, 2.5%. Only then we will see possibility of the rally sustaining itself to higher level, because right now it's at around 3.04%, and for a 10% move the yield has to drop by 1% or so, generally speaking. So the PE expansion, if it has to take up to this level, then in that case the US Treasury yield has to drop considerably below 2%. I don't know whether it's going to come like that, because that will only come only if the market is going to get into a fear of a big recession. So the recession, when it sometimes what is not good for the economy, the markets are bullish, and because of the likely fall in the interest rates, in the long term interest rates, the general feeling is that no, the demand can revive again, because most of the loans will be benchmarked against the long term treasury yields, and so the recession now will give way to economic activity again coming back, and probably hoping that the liquidity drain will also be to some extent halted in case if the recession sets in. Because of all these reasons, the market tends to go up. Second thing is, most of the corporates have still declared good results. No, even in US, I think the results have been generally good, and we are very highly correlated to the US market. Now US S&P is going closer to 197 trailing, 197, and right now at 4,200 we are having a trailing PE which is 21.31. Okay, 21.31, and normally this can also expand a little bit. Okay, but for this to expand, the interest rates have to fall a little more, and so without the interest rate falling, if there is a rally in the market, I think that rally will not sustain, because at some stage it has to come back to some sort of a correlation between the yield and the market. So we have to be very careful that whether this bull market is getting built on what. So profit taking also will become very important, and you need to keep stop losses carefully, because once an unrealistic rally takes place, which is not backed by either the liquidity expanding or in a liquidity contraction period, and when the interest rates are still, the treasury yields are still high, then on what basis this rally can sustain? Okay, so that will become a big question mark, and we should see the the retracement coming back closer to the 20 mark PE. Okay, which probably could be something like next, of course, the our own PE also, TTM by September end will also expand, but will all expand by another, say 820 or so, or 810 or so if it comes. And in that case, we'll still need a fall then to take place. So there is a good chance that even if the rally goes up, I will not be surprised if it comes back to 16,400, 16,500 at some stage, in order to ensure that we get to a more realistic levels. Okay, for the time being, because considering whatever that's happening globally will not justify a new peak based on the present fundamentals. So this rally, ride with the momentum, because we can't fight the market, but be careful about it. That's the message that we can send. Now, based on the corporate earnings results that have come in this month, in the last few weeks or so, for the June ended period. So if you do a stock screening, whether it's large cap or mid cap, you should first look at, if you want to invest in stocks, you should look at which stocks have posted a good amount of profit growth compared to quarter, not only a quarter to quarter on a yearly basis. See, one is the quarter to quarter. There is Q. Suppose if you are talking about April, May, June Q1, then it should be compared with the last Q4, previous Q4, right? There is a tendency also to compare Q1 of this year of 2022 with the Q1 of 2021. Okay, this is also done. So this becomes an year-on-year basis for a quarterly assessment. Now this can sometimes give you a skewed result because the economy sometimes will be bumpy at that time, so you will have a good growth because last year also pandemic ridden. So this year it has revived. So you may see a very spectacular year-on-year growth in some numbers. But what is very important also is that what is the future going to shape when you compare with the immediately previous quarter. So what we should do is that we should screen stocks where the Q1 is greater than the previous Q1, that is Q4 of last year, which is better than Q3. If this is happening, then those stocks are worth to be concentrated. Then in that case, you can also put a filter that what is the percentage of growth that you should have. That is whether the operating profit is growing at 40%, 50%, 30%. Because those stocks which are really looking like a growth stocks should have a good amount of profit growth coming. Okay, so based on that you do a screening and try to take companies which are doing extremely well. In addition, if there is also going to give a dividend, then in that case it scores both on the income pattern also. So that means growth plus income. So are we looking at, because last time when we talked about it, we talked about growth versus value. Now there are some cases where the growth plus income also could come, right? Growth plus value. So there are stocks like that. Now if you do a screening of all the important stocks which have done very well, because we can't go with very penny stocks, so we have to go with some good stocks. And I will mention some of the stocks here and you can do your own analysis of that. Now, Coal India. This stock price gain is also there. Dividend yield is also very good. Good growth on a quarter to quarter basis. Coal India is one. Right? Then Blue Dot. Blue Dot is another stock. Okay. Then TVS Motors, which is doing extremely well. Right? Then IDFC First Bank. Now these are, of course, from whatever we have done the study, I think these are all stocks, particularly IDFC First Bank and all, after sinking to a low level, they started to climb quite fast. So these are all extremely good growth stocks right now. Of course, TVS Motors have gone above its previous highs and also we have to wait for a correction. So probably you have to choose the place. But what I'm saying is these are all stocks which have done exceedingly well on a quarter to quarter basis. Now also if you look at the other stocks which are there, Federal Bank. Then Adani Green. IRCTC. IRCTC is a low dividend yield stock. Then Tata Chemicals. Okay. Federal Bank, Adani Green, IRCTC, Tata Chemicals. Then some more stocks which I'll mention. M&M, another fantastic growth stocks. Here Eicher Motors has done well. So some of the auto companies are featuring very much. Airtel, Bajaj Finance, Exide Industries. I don't know about this is stock much, but I'm just saying there's no, these stocks have done, again they're all, this is in the Nifty itself. Okay, M&M, Eicher Motors, Airtel, Bajaj Finance, these are all in the top 50 stocks itself. Now, if you go, these are also stocks. You can just see the quality of these stocks. Federal Bank, Adani Green, IRCTC, Tata Chemicals, all are excellent stocks by itself. Coal India, Blue Dot, TVS Motors, IDFC First Bank. I think we are given some 12-13 names. And we'll just look at one or two stocks, look at the chart. So what you should do is the technical, that's what we are saying, the technical analysis should be combined with certain sort of a fundamental analysis for investment. Once you see the operating results coming out very well, okay, and till that time if the stocks have been falling and suddenly after the result it starts to flare up, because most of these stocks will not have just one quarter growth. The moment it starts to turn around in one quarter, it will not be one quarter growth, it will at least continue for a couple of quarters. Okay, so based on that, immediately you buy it for the next quarter, for the next few quarters or few months. I think you would have made a spectacular return. So that is how you should screen and do your investment. Now let's look at Coal India. See, Coal India, see what happened. Coal India in August 15th, it was around 445, and it fell right up to say the low is it came down to 109, and the last couple of months itself it has been growing and going on big volumes. Let's look at the daily chart also. Now, even in May, June, up to May, when others were falling much more, now this has started to climb. And if you see the last couple of months, it has gone from 167 to 229, 62 rupees, which is more than 30-35%, right? Not given by Nifty. So this is outperforming the Nifty in the last few months. Coal India. Now this is a stock which gives a good amount of dividend. Of course, the price appreciation till now has not been enough to justify our investment for a dividend stock. But right now, when the operating profit has started to come out very well, that's the time you should make for the investment for the next few quarters and take the profit. Okay. Now let's look at 2 or 3 more stocks. Let us say Tata Chemicals. See, it has just zoomed the last couple of days. It has gone from something like 773 to 1180. See, it was 773 on 1st July. On 1st July, it was 773. And it came out with a very heavy volume here. Okay, which was around 1074. And even from there, it went up to 1180 immediately. So this particular area will be a very important support. This 1010 will be a very important support as far as Coal India, as far as Tata Chemicals is concerned. It has just zoomed. Probably we can wait for a correction. But what I'm trying to say is, these stocks which have done very well now have been rewarded amply by the market. So one is that even if you have not been able to find it out just one day before the result, you can play through the options route just for on the result day, or probably once you have seen such a rally, okay, then in the case wait for a correction and then look towards buying, because this is not going to stop in one quarter. Now let's look at Tata Motors. So not Tata Motors, TVS Motors. See, it has almost, price has doubled the last couple of months. From in March it was 500 levels, now it is 954. It went up to as closer to 1000. So this has been doing well for the last couple of weeks and months itself, and 28th July, I don't know when exactly the result was announced, but on 28th July also it was only 908, and since then also it has rallied to 954. So this is one stock again which probably you have to look at some sort of a correction in the market before you go for a buy. So this is a, let's put it in the monthly chart. Okay, see, look on the monthly chart, see the rally in the last couple of 1, 2, 3, 4, 5, 6. So this has been a clear outperformer even in compared to Nifty, because Nifty is not performed to the extent that even TVS Motors has performed, right? So ever since the pandemic low of 200, this has multiplied by 5 times now already. Okay, so clearly an outperformer even when compared to Nifty. So a stock which is to be worth watched on any dips to be bought. TVS Motors. Then we talked about IDFC First Bank. See, this stock also got hammered from 80 to even 16, 18 levels, and now it's around 48 levels. And one stock which can have a bright future in case if things go very well. Now, in the last couple of weeks and months, it has done exceedingly well, outbeating other stocks. Or even in the banking sector, this has started to do well in this particular. If you look at this particular week itself, it is from 43 to 50. Okay, almost 20% in this level. Look at the monthly daily chart. So this is above the clearly above the 50-day moving average, and now it's also above the 20-day, I think, 200-day now clearly. Yeah. So the 200-day moving average comes closer to the 41, 42. So any dip towards any of these moving averages, I think should be a step where we should look for a buying. So now the overall trend has changed for the positive in case of IDFC First Bank also. So it is clearly a buy on dip stocks right now. Okay. Let's look at IRCTC. Okay. Now this stock is just about to clear the 200-day moving average, right? So ever since it fell, now it is looking like again starting to move up. So this stock at one time had gone up to 1,100 to 1,200. That was, of course, based on great flamboyance. Now it has corrected itself by more than 50% from the top. So a good stock to be kept in, because these are all high beta stocks. So if Nifty is going to do well, all these things will do even much better. So I think we saw very good volume also on this day, which is the 751, 752. So if it starts to cross this, the 200-day moving average, I think it's a good stock to be invested. So IRCTC is another stock. Please put it on the watch list. Bajaj Finance. Another stock, of course, it had from 8,000 to 5,250 and started to slightly move up. Looked a little bit choppy till doing the correction pattern. Generally, has looks like a Nifty pattern itself. And there is another stock which has outperformed in the last bull run. So clearly a case to be watched as far as a new momentum if it is going to pick up. So another stock to be watched is the Bajaj Finance. So these are the ways that you make an analysis of the overall situation, overall trend of the market, based on the performance of the company. Then based on now we saw IDFC First Bank, we shortlisted from the quarter results. Now considering its performance, now it looks like breaking the 200-day moving average, right? So it is to be watched for a buy. Certain stocks have already broken and has gone up. For example, TVS Motors, Coal India and all. So wait for it to come down. So now till such time it comes down, look at these stocks which are now likely to cross and then go up, like IDFC First Bank or some of the other stocks which you have mentioned. IRCTC is another stock which is to be taken care of. So IDFC First Bank, wait for a dip. Then IRCTC you can look towards a buy. And let's look at even another growth stock, Blue Dot. Blue Dot Express. So this stock also, of course, it has run up quite heavily the last couple of months itself. It has been doing well. So that's the reason why this fall, which took place up to March, and ever since it started to move up. See, after the March result itself, April, when the result came somewhere around April, I think April or so, it crossed the 200-day moving average, and after that it has not fallen. It has not fallen, and the result that came after that also is quite successful. So Blue Dot has been generally doing well, and it has also given a huge amount of gain compared to Nifty. If you look at from the pre-pandemic level, this has gone from almost 2,000 to 8,800, four times. So this is one stock probably can gain a huge rally can come. So these are some of the growth stocks which we have mentioned, like the Blue Dot, Coal India, Federal Bank, Adani Green, IDFC First Bank, even M&M, TVS Motors, Tata Chemicals, IRCTC, Bajaj Finance, Airtel. So some of these stocks look like that. Whenever the next quarterly results come, look for a new stock momentum, or look for stocks which have already been below 200-day moving average but now crossing above the 200-day moving average. Okay, that will also give us, then you can probe as to why it is happening right now. Then in that case you can go for that. So overall situation is that we are in a bullish situation, but at the same time whether this is getting built on wrong fundamentals or wrong valuations, I don't know how to put it exactly, that word. Though market is supreme, there are questions about the sustainability of this rally which is happening even when the US Treasury yields are still at a high and Fed is continuing to increase rates and looking towards contracting their balance sheet. So on what basis this is going to be built? And EPS growth also is likely to get subdued if the recession is going to come. So the valuation expansion that can come on the basis of PE expansion can become questionable, and there should be a realistic EBITDA growth and EPS growth to sustain this. So which are the sectors which will continue, or the stocks which will continue to do very well as far as the growth is concerned, irrespective of whatever happens? I think those are the stocks to be watched. We have not seen any great thing as far as IT stocks are concerned, but more or less the IT stocks are clearly following what's happening as far as some of the top stocks in NASDAQ is concerned. So despite valuation concerns in some of the IT stocks here, I think we continue to be correlated with the US NASDAQ stocks, and hence we have to maintain our bullish bias based on what's happening there. So thank you very much. So please ask your questions now. Anything. Thank you. So thanks for your participation. Looking to see you again next week with a different topic. Thank you very much.